Hi, this is Daniel, and this is a special Thanksgiving update to go over the latest stock market news where we're talking about events at OpenAI, Nvidia's amazing third quarter results, Best Buy's update on the US consumer, as well as a remarkable and sort of shocking story of how Netflix was swindled out of tens of millions of dollars and how it actually makes it an exceptional business. So let's dive into some of these headlines. Once again, you're watching Unrivaled Investing. I appreciate that thumbs up, that subscribe button. So Sam Altman back as CEO at OpenAI, successfully playing that reverse Uno card. And part of the reason why he got the ouster was, at least this is according to a story from Reuters, was that researchers have warned that they had a further AI breakthrough ahead of getting the boot, and that they were afraid that their latest models that haven't yet become available to the public. So think they currently have ChatGPT 4, maybe this 4.5, or maybe ChatGPT 5 is just so remarkable that they're worried that, they're moving too fast and that there could be risks, that this model could be used for nefarious purposes. And so I personally look at this as a co-founder of AI Ticker Chat, which leverages artificial intelligence to help investors. I just think this is just an incredibly exciting development because the tools and models are just going to keep getting better, which ultimately means the consumer keeps benefiting with more intelligent artificial intelligence, that's going to be able to more easily assess, hey, is this stock compelling right now? Or, should I or should I not buy this stock right now? So that's, I view this as just tremendous. And I'm very excited personally. I was a little down when I saw that Sam Altman got, kicked out. So I'm excited to see that he's back and that they can focus on accelerating their growth. And you look at, who's powering this growth. You're looking at Nvidia, and they're selling their GPUs, posting remarkable 206% revenue growth year over year. Talk about a business nearly $20 billion in quarterly sales. Management talks about, look, this growth reflects the transition from general purpose to accelerated computing and generative AI, talking about increasingly customers using large language models for startups, consumer internet companies. These companies are starting to build, whether or not it's creating an AI co-pilot or assistance to their platforms, they are using these graphic processors, these GPUs, and it's critical for this AI revolution. So the question is, well, why is the stock then selling off if their results were so incredible? I mean, you see continued incredible profit margins, you're seeing incredible growth, 200% growth, yet the stock's down 2-3% today. What's up with that? Well, if you looked at AI Ticker Chat and looked at AI Predict before they reported their results, its outlook wasn't that great. It was effectively saying 50% upside, 50% downside, not that compelling even before they reported the results. So this should be a warning sign to investors, like, okay, maybe this is worth understanding, because this AI Predict, reading the transcripts, reading the financial statement saying, hey, here's a range of growth, here's a range of end multiples, here's a range of profit margins, a few years down the line, 5 years out, here's a possibility of the range. And it was saying, this just isn't that compelling. It can find situations where the upside's a lot more significant than this. So let's sort of break this down very high level on why Nvidia stock might have sold off, even despite the fact that the results are so strong. So currently Nvidia is doing around $40 billion annualized in terms of profit. Roughly, very roughly. Last quarter was, third quarter was around $9 billion. Next quarter is projected to be around $10 billion. So let's say they're able to keep it up at around $40 billion in profit versus a $1.2 trillion price. Now that's effectively become a real weight for Nvidia. That's a very full, heavy weight for a company that's only generating $40 billion in profits. And so the question is, if you take that $1.2 trillion market cap versus $40 billion in earnings, that's around 30 times earnings. Now, you might get some people that say, wow, that's really cheap because you're growing at 200% and now you trade at 30 times. Your PEG ratio, so price to earnings to growth, is really compelling. Well, the challenge is you need to look a year out. You need to think a year out, 2 years out, do you still have that growth? And that's the question for Nvidia right now, is do you have something that causes their growth to continue, to go from $10 billion in profit per quarter to 12 billion, 15 billion. So they go from 40 billion in profit a year to 50, 60, 80, 100 billion in the years ahead? Or is it possible that competition slowly catches up, gross margins come under pressure, profitability also comes under pressure, and that you see the historical cyclical swings? I previously did a video on Michael Burry. He bought puts against the semiconductor ETF. So that directly benefits from Nvidia stock going down. So this in anticipation, saying, hey, next year and the year after, you might have this step up because of AI spend, but will you see something that'll drive a further step up that could cause the stock price to go higher? And that's really I'd say an uncertainty. Is there something that can cause demand to accelerate from here? And that question of acceleration is tough to assess. I just personally think there are probably easier plays out there. And, you look at Best Buy now. What are they saying? They talked about, we're talking about a weak macro environment. Consumer demand has been more uneven and difficult to predict. They talk about the sales trends in the third quarter and so far in November, and saying based on those sales trends, it's prudent to lower our annual revenue outlook. This is a very interesting warning. I've now heard it from a member of the Unrivaled Nation who runs a quick service restaurant, as well as, you've seen it from Walmart as well, saying that starting in October or this fall, they've seen a noticeable slowdown in the consumer. So seeing that over and over again, it makes it hard for me to believe that you're in a territory where the stock market can keep rallying. I just don't, especially when U.S. consumption is 70% of the economy. So unless these are just weird one-off data points, whether or not it's Walmart or Best Buy, I don't think it is, but it does possibly reflect a rolling over consumer, which is a red flag for investors to consider. Personally, thinking between Best Buy or Nvidia, I just think there are, once again, easier plays out there. I call out what I'm personally doing at unrivaledinvesting.com. I just had my own Thanksgiving weekly update. It was a special Thanksgiving update where I did a video over my top holdings to help people understand, the quick overview of the top holdings. Also, by the way, I'm having, I expect pricing for the top tier subscription to go up later this year. So now's the time to lock in the favorable Thanksgiving pricing and rates. Last story, talking about the investing climate. I think this is, interesting to reflect on. This was a story from the New York Times, talking about how there's a strange $55 million saga of Netflix series you'll never see. And it's talking about how they effectively transferred $55 million to Carl Rinch, I believe, who's going to make a series of shows. Didn't receive a single episode. After he signed the contract, his behavior became erratic. He thought he could be able to predict lightning strikes. He gambled a large chunk of the money on Netflix, from Netflix, on the stock market and cryptocurrency. So he blew a lot of that money. He also bought a fleet of Rolls Royces. I mean, honestly, this reminds me a little bit of Dave Chappelle, going off to Africa, after his very successful show. And then, the fame was just too much for him and he got part of this makes me think this guy was just a Looney Tune. But I think this misses the bigger picture, which is that Netflix is just in a beautiful position that they could have a $55 million loss on a show. They can finance so many different shows, take so many different bets, and say, hey, we can try these different things. Sometimes it doesn't work. Because keep in mind, this $55 million loss, I believe this was from something back in 2018. So you're only learning about it now, which is pretty remarkable. And looking at it, like, they've been able to keep growing, keep financing successful shows. So this scale, I think, is a real advantage. I previously called out Netflix back in 2022, where I called out buy and chill. I thought it had a lot of upside at the time. Bill Ackman was selling out. I thought it was great. Since then, the stock's up over 100%, while the fundamentals are doing okay, not as good. So I personally, it's no longer as super compelling as it is for me, but it's an example of occasionally I will call something out on this channel. Most of the time it's just, covering what are my thoughts on a stock. But that was an example of where I thought, it's actually very compelling. So if you enjoyed this update, please make a point of hitting that thumbs up, hit that subscribe button. Happy Thanksgiving to all who celebrate, and thanks so much for tuning in.